Hi, my name is William Cattison and this is my screencast assignment on the Petty Cash Fund. What is a petty cash fund? A petty cash fund is an accessible store of money kept by an organization for expenditure on small items. However, it is also used when the burden of having to write a disbursement check is too much. It is used to pay for items such as office supplies or postage. However, in modern society, with the ease of access to credit/debit cards, the use/need of these petty cash funds have been reduced. There are three main steps involved in the petty cash fund. The first step is establishing the fund, the second step is making payments from the fund, and the third step is replenishing the fund. Establishing the fund. The first step of establishing the fund is to transfer cash into the petty cash fund. In this journal entry example, we can see that the petty cash account has been debited while the cash account has been credited. This reveals that cash has been removed from somewhere else and has been placed in a petty cash fund inside the business. This process decreases the cash and increases petty cash. Now that our petty cash fund has been established, we now need to know how we make payments from the fund. When making payments from the fund, there are two methods that can be used. Cash can be either taken directly from the fund and used to make the payments required, or it can be used to reimburse employees for payments or costs that they have incurred themselves. However, in the case of a reimbursement, it is required that employees present a receipt to show what they are being reimbursed for and to be able to record the reimbursement. It is important to note that no journal entries are made in this stage of the petty cash fund. As payments are made from the fund, it is important to replenish the fund. In order to replenish the fund, the cash required must be calculated. This is done through the Petty Cash Fund Replenishment Report. The Petty Cash Fund Replenishment Report takes the remaining cash in the fund and subtracts it from the total cash at the beginning. This gives the cash requested to replenish the fund. This is then compared to the total receipts in the fund. Once the amount required is found, the journal entry is then made where all expenses are debited and cash will be credited. The petty cash fund is left at its total amount. However, if there is discrepancies between the total receipts in the fund and the cash requested to replenish the fund, the cash over and short account must be used. This temporary account will also be debited alongside expenses in the journal entry by the difference between the total receipts and the cash requested to replenish the fund. This will then ensure that the petty cash fund is fully replenished. That's the petty cash fund. I hope you enjoyed it and maybe you learned something. That's a maybe.